Epstein with your morning flash update for this Wednesday, the 25th of May, 2022, 8:25 a.m. You know, I've been spending my days at least an hour and a half, 2 hours a day building my outside day course. And I'll tell you, I'm learning a lot. And I can't believe, you go back to things that you didn't remember and you start trying to do a course that you try to prove points with to somebody, and I'm all of a sudden seeing new revelations open in my own thing that I had not only forgot about, I just didn't pay attention to, and they're right in front of you on the charts. I'm amazed. I might even do a teaser for you and just show you some of the unfinished chapters at some point. Another thing, in these markets, you're getting these violent swings up and down. This is very much a day trader's market. And I do mean that, a day trader's market, hitting and running. Let me get to the morning data. We'll talk about that in a minute, too. In the U.S. MBA mortgage market, you've got all your numbers coming in. And where people are getting hurt is this refi. I was reading today on how many mortgage companies have let people go, are now looking for mergers, closing down and the like, because this is such a big part of their business, the refi, and it's just not happening. As you're seeing in new home sales, what are they down, 20%? They're just not able to survive on this, and you're going to see some of these companies have to do this. That's from boom to bust. They had a decade of boom with the Fed, easy money. Now the bust cycle hits. The durable goods, they came out better than I think a lot of us were hoping for. At least I was hoping to get positive numbers, and you did. They're shrinking, but they're still positive. The petroleum stock estimates come out at 9 this morning. They're probably going to show tightness again. And the Congressional Office publishes the updated budget and economic projections through 2032 at 1 o'clock today, but I don't think that's what the market's going to go on. You know what the market's going to look at? The FOMC minutes. Yeah, the minutes. They come out at 1 o'clock. They should be pretty hawkish. We'll see just what the market offers. Now, if you take a look at where you're doing in the stock market, you're about 35 points away from having, if you drop from here again, 35 points from having 8 weeks in a row down in the S&P. That'd be the most that has ever happened in a row. That's rather dramatic. We've come down into support zones in the silver market, the gold market, the copper backing off a little. And part of this has to do with the dollar finally getting a bounce. 2 days ago, the dollar hit its lower Bollinger Band. It's due for the bounce, and you just hit the upper Bollinger Band in the euro in the past 48 hours. Bingo. Right back the other way. If you haven't taken that enhanced Bollinger Band course, learn about it. In the grain markets, the washout continues as we're getting good rains in the Midwest. The farmers are caught up. I've been through this just so many times in my life where you hear people say, oh, it's different this time. The crops, there's going to be too many problems. Nonsense. If you play for that, you get annihilated. You plant crops, prices go down. Then things go wrong with the weather. You get your summertime rallies as things are wrong. Then as the harvest comes in, it's normally on par. That's how you have to play it. You look at other factors, but you're down now hard enough in the wheat where you're into some support. I don't know if you're watching what the 10-year notes have done. I checked again this morning the screen. I didn't believe it. We're at 274. We had gone to an inversion, the 210, 3 weeks ago or so. Market was on fire. Interest rates are going to explode. I think we got up near 3.2 overall in the 10-year. You're down almost 40 basis points from that high. What the heck is going on? Well, I'll try to talk about that at another time. But suffice to say, as I said, you've got to understand the swings in these markets. Like you're a big down right now in wheat. Where are the pivot points in that? What do pivot points do? And I want to explain that. A pivot point is part of a formula that some famous traders devised. I'm not going to name them. But they created a formula where you're looking at, and this is just part of what the formula is, and I teach the formula in my course. You're going to look at the previous high, low, and the close. Then in the formula, you learn how to develop this, the center line, the pivot, and you're going to have what's called resistance line 1 and 2. What traders are doing is they're trying to sell into these lines in the hope that the market will fall back to the pivot, or buy into the bottom lines, hoping that an S is support, hoping the market will rally back to the 18-day average. I had experience with this because we had one of the world famous traders trade in the 80s through us, where this man had written books on how he made $1,000 or whatever and turned it into $1 million, and I swear he did. I also promise you how to take $1 million and lose back, God knows how much. But I think the reason he lost wasn't the formula. I think he got bigger than the market. In the 80s, the futures markets were not what they are now. And he couldn't even take on managed money. I remember having phone calls with him early on in his trading career and mine, saying, come on, take this money. And there were two firms, I and one other firm, that were really part of this. And it was the most phenomenal run I'd ever seen. I kept that formula because I've used it my whole career, and I understand that the way that I use it is a mixture of timing. I look at it, no, I am not a day trader. I use it for entry points and exit points. There's many ways you can use this. The formula, though, is built on the concept of day trading. So if you want to see this, I've created a video series that teaches you the formula. You can do it yourself. Most charting services will carry pivot points. How to use it and how to do something different. How to tie momentum, the stochastic, to it to give you maybe an edge in terms of your timing for the sells and the buys. Because just because you hit the sell number, maybe you extend through that. Maybe the market's saying as you hit it, the swing line, rather the slow stochastic is still pointing up, not turning down. Maybe you hold off longer. I give you some ideas with it. How do you get this? It's simple. Just go to our website. Under free offers, it's there, the course. And as I said, it's a video course. Just go there. All you need to do is, if you don't want to do that, if you're watching me on your computer screen, move up through here, click on the icon you'll see. That'll take you right to that section as well. I'm Ira Epstein. Keep in mind, we're going to get that 8 weeks in a down in the S&P if this market doesn't find its footing soon. And I'll talk to you later.